what a rapid currency dilution environment does is it puts every single person in that country on a treadmill to run as fast as they can to keep up with it, not just in terms of where to put their savings, but also how to continually increase their wages so that they're not just being completely left behind in global purchasing power terms. Of course, the same thing is actually true in developed countries. It's just more subtle. So in the United States, money supply grows at about 7% a year on average. And let's say money supply per capita, right? So if money supply is growing at 7% on average, money supply per capita is probably growing at 6% on average. If you're not keeping up with that, you're becoming a smaller share of the network.
Lyn Alden is a renowned macro analyst and the author of Broken Money, a thought-provoking text that explores the history of money through the lens of technology. In the book, Alden essentially explores the broken state of the global financial system and how it is impoverishing billions of people worldwide while continuously and rapidly enriching the top 1%. Alden also discusses how, in the modern era, energy abundance and technological enhancements have enriched and broadly improved all aspects of our lives, with the obvious and painful exception of our outdated monetary system. Man has walked on the moon, made countless remarkable medical advancements, and performed many other gigantic feats, yet we are still stuck with the same debt-based fiat system that has been proven to have a 100% failure rate. According to Lyn Alden, the time has come for us to permanently change our outdated monetary system and move from a debt-based, overly inflated, failing monetary system to one that supports scarcity and deflation, decentralization, and ease of payments and settlements via a powerful digital network. Bitcoin, of course, checks all of these boxes and more. With the leading crypto's rising popularity in all corners of the world, coupled with the current very gloomy macro picture, Alden believes the United States and the rest of the world are drawing closer to a Bitcoin standard era, an era during which we will see an explosive increase in the global adoption of Bitcoin and an even more explosive increase in the crypto asset's price. We will now bring you clips from Alden's recent interview. Please watch the video to the end so you don't miss any important details. You can also help with the YouTube algorithm and support the channel's growth with a few simple actions. Click the like button, subscribe to the channel, and turn on post notifications for more videos featuring Alden and other brilliant minds. Thanks, and enjoy the video.
In the current system, there are 160 different fiat currencies, roughly. And they're all like these little silos. They all have a local monopoly on their jurisdiction. They have very little saleability outside of their jurisdiction, except for the dollar and a few other top currencies. And that is largely enforced due to the legacy system. So you can only really get money in size in or out two ways of a country. One is physical ports of entry, so you can bring cash or gold through an airport. Obviously, you're usually tightly limited there, usually under $10,000 worth, sometimes less. And the other way is wire transfers in or out, but those are completely controlled by, government central bank regulations. And they get to decide, if I send dollars to someone in another country, does that person receive them in dollars, or do they get converted to local currency at the official exchange rate, whatever it might be. And even fintech companies are just really mostly just overlays on top of the correspondent banking wire system. They just basically have accounts in multiple things and can make those go quicker, but they're still usually relying on the underlying banking. And with things like Bitcoin and stablecoin, and there's even gold-backed stablecoins. But what all these technologies do is kind of crack open these 160 different silos and allow monies to compete globally once again. So someone in Nigeria can now, you can bring infinite value density of Bitcoin or stablecoins through an airport by memorizing 12 words, for example. Or if I pay a graphic designer in Nigeria, she can hold up a QR code on a call just like this, and I can pay her, and she gets, it could be Bitcoin, it could be stablecoins, whatever she asks her for in her invoice, she can receive. And it just goes around her local banking system. As long as, from my perspective, as long as like I'm not breaking any American laws, like I can't really necessarily hire like an Iranian graphic designer, but as long as I'm not sending money to a sanctioned country, this is now a method to get value to someone in the money she wants rather than being stuck with the local system. And as long as she has access to email, DMs, video, and basically internet connection, she can now bypass those prior two methods. And so the world's becoming more interconnected in terms of money. And I think that has big implications going forward. I started to realize money was broken in some sense back in around 2017 or so, um, because we started to get a widening fiscal deficit in the US, even though we were not in a recession, which had not really happened since the Vietnam War. That was and it continued in 2018, 2019. And so I started looking more into how do sovereign debt bubbles end? Like prior to that, I was like, well, eventually they print it or something, right? But it's like, okay, actually mechanically, what does this look like, and what time frame, and what are the factors, and what to look for? So I started to do a multi-year deep dive, and that's actually what kind of led me to transition away from mostly focusing on equity investing to more focusing on macro, money, energy, that kind of stuff, because I realized that we're entering a unusual macro environment. That it's like the type of decade that kind of changes a lot of things. The bigger than normal things happen that history books kind of focus on more than other decades. And so in other words, I was like, this is gonna be a more macro decade than the 90s were, for example. Um, and so that was kind of like the initial starting points. Um, and then, of course, kind of like studying Bitcoin over time, seeing how that works. I originally I always found it neat, but I was like, I mean, the chance that any sort of like new techno money is going to work is obviously very low. So the first time you see it, you're like, that's neat, but I mean, come on. And then it's like when it comes back a second time, you're like, wow, that thing's still here. And then you're like, how does this thing work? And then you kind of like over time, you just kind of run into it more and more time. And so you actually think, okay, this is actually pretty interesting. It's the only asset that ever survived more like three 75% plus drawdowns and then went back to new all-time highs. I'm not aware of any other asset that has done that.
The problem of currency debasement is currently more debilitating in emerging economies, but Alden reckons it's only a matter of time before it spreads around the globe. Several emerging countries around the globe, from Nigeria to Egypt, Lebanon, Argentina, Sri Lanka, and Zimbabwe, are battling crippling levels of inflation and an unbelievable rate of currency debasement. According to Alden, this could be the reality of many developed countries in only a matter of years, as long as governments keep printing indiscriminately. By the time that happens, Alden envisions that the currencies that are already at that point today would have been completely wiped out, and what we consider strong currencies today will only be worth a fraction of their current value. Plus, there is no avoiding or hiding from currency devaluation. Whether you invest in traditional asset classes like stocks or bonds, run a small business, or depend on your wages to support your family, the struggle is always how to catch up with the devaluation rate, something many people never achieve. Here are more clips from Alden's interview.
There's 160 different currency bubbles in the world, and dozens of them are very bad, right? So the top handful, if you're an American, you don't really have to think about money that often. If you're in another developed country, you still think about the dollar occasionally, usually because commodities and things like that are usually priced in dollars. And so most people have kind of two currencies in their head. But if you're in a developing country, you're kind of a financial officer in addition to whatever normal job you have. You're trying to manage things and thinking about things that Americans and Europeans don't have to deal with that often, which is the currency itself just rapidly losing value or at any moment risking a sharp devaluation. There's currently about 30 countries that have double-digit inflation right now, and they have ballpark about 1 billion people in them. So this is not a small problem. And if you kind of sample it over a 30-year period, it'll affect billions. And so it kind of just hit home how siloed the financial system is. Another big problem is wages, as well as just overall pricing. So if you're a worker in Egypt, right? So money supply growth is about 20% per year on average. If you're not aggressively trying to get a 20% raise every year, you're being diluted. Like your share of the monetary network is diminishing, and you're on the wrong side of the Cantillon effect, right? So your money's being basically siphoned away from you. Your ongoing purchasing power in global terms. So, for example, your dollar equivalent wages will be shrinking if you're not aggressively getting raises that keep pace with the Egyptian pound's devaluation. What a rapid currency dilution environment does is it puts every single person in that country on a treadmill to run as fast as they can to keep up with it, not just in terms of where to put their savings, but also how to continually increase their wages so that they're not just being completely left behind in global purchasing power terms. Of course, the same thing is actually true in developed countries. It's just more subtle. So in the United States, money supply grows at about 7% a year on average. And, let's say money supply per capita, right? So if money supply is growing at 7% on average, money supply per capita is probably growing at 6% on average. If you're not keeping up with that, you're becoming a smaller share of the network. And there are other people that are, say, closer to the source of money creation, bankers, large corporations that can issue tons of long duration cheap debt. They're basically shorting the currency that you're earning your wages in. And they're getting outsized. They're outperforming that, say, 6% hurdle, while the average worker is struggling to keep up because anchoring bias is towards zero. So if I'm an employer and an employee comes to me and says I want a 6% wage increase, my natural result is, I mean, are you 6% better than last year? And of course the answer is, they're like, well, no, but money supply went up per capita 6%, and I'm as good or better than I was last year. In fact, I should ask for a 7 or 8% raise because I'm a little bit more productive and more experienced, and I just want to keep up with the currency dilution. But that's not how things work. And so having this kind of constant money supply growth just kind of makes it so that if you're not a financial asset owner, especially if you're not a financial asset owner that's also shorting the fiat currency with long duration, low cost debt, you're kind of not playing the game. Or at least you're kind of blocked out of the winning strategy. And that's, that's why I consider money broken. It's basically the people who usually earn the most for the least effort are the rent seekers, basically the arbitraging this gap. Whereas I think a better world is where people that invent things, or people that run effective businesses, or people that are really good at their job. That's the type of people that should really succeed in this environment, rather than kind of arbitragers and financiers and leveragers and things like that. And so that's why overall I think money's broken, and that experiencing developing countries, not just Egypt, but Egypt's the one I have obviously the most experience with, really kind of helps with those details.
In her previous interviews, Alden often talked about a scary scenario when higher levels of background inflation become an everyday phenomenon for Americans, just like it is today for Egyptians. According to the renowned financial analyst, this grim future could be as close as 5 to 10 years. When it finally happens, Alden is certain that everyone, even the current naysayers, will have no choice but to transition to cryptocurrencies like Bitcoin. Alden believes we are at a point where the transition to a sound money system is completely inevitable. It might not seem too obvious to everyone right now because citizens in emerging countries with weaker currencies can temporarily depend on stronger currencies like the US dollar. But these so-called strong currencies are not without problems of their own. They are also getting inflated away, just not at the same pace as these other currencies. But someday, when we need to print even more and more to meet our massive debt obligations, the inflation rate will really speed up until the world can no longer depend on even the dollar to maintain wealth. When that day comes, and according to Alden, it will be much sooner than everyone believes, the world will unanimously turn to Bitcoin to maintain and increase its wealth. Do you agree that Bitcoin could be the only asset that can end all this and provide a level playing field for us all? Please share your thoughts on Alden's interview in the comments section below. Also, ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.